Investors. The following is a presentation of TFNN. The Morning Markets Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off. 24 minutes to go until the start of trading, and you have markets pairing some of the gains this morning, but we got retail sales coming in hot this morning. Market pretty much takes it in stride. We reach a high overnight, 66.96, and the S&Ps were just off that level, positive by 5 points, trading at 66.85 right now. NASDAQ 100, how about 9 straight days of gains? The NASDAQ, we're up by 0.2% right now, up 52 points, 24,603. Dow in the red this morning, pairing some of the gains in the last hour or so. Dow up, negative by 71 points, or about 0.2%, 46,193. The Russell, negative by 1. We jump over to notes, bonds, the dollar. So we got the 10-year right now. I put out the gold report update this morning, and we had the 10-year about 4.04. Yeah, that's where we are right now. Maybe 4.05, 4.045. There you go, round it up. 4.05, the yield on the 10-year. You take a look at the daily. Higher price, lower yield, chopping into this area that we've been at for about 8 days now. Okay, 4.04, call it. The dollar under pressure this morning. All right, check out that dollar move. Now, I just showed you that yields were chopping around at the same area. The dollar is breaking lows. Now, keep in mind that 96.37, you have the 10-year at 4.19. Okay, we're well below that on yield. Dollar looks like it's coming back for at least this area of 96.37 right now. The dollar, we might get a 96 handle as we speak. We were already down to 96.93 on that dollar. So you get dollar weakness, and you better believe that's helping gold, folks. Gold, how about it? Up another $5 to $37.82 right now. You jump over to silver, up 26 pennies. Silver makes a high of 43.35 this morning. Copper's been catching a little bit of a bid recently, right? You have that huge trade-off on tariffs at the beginning of August, end of July. And since then, we've seen a series of higher highs, higher lows. The one thing sticking out here is, and it's everywhere on these charts right now, folks, okay? In the metals market, whether you're talking about gold, you're talking about silver, you're talking about copper, okay? This move on volume, the week of September 1st, September 2nd, September 1st being Labor Day, okay? We had volume across the board. You jump over to gold. Let's put it back on a daily so we can really see the acceleration, and there it is, okay? Now, if you recall, right, we came back from Labor Day, dollar lower, metals prices accelerating higher. This is a 100-point bar, just under that level, but a low of 35.06, a high of 36.02. Okay, you accelerate higher, you do it on volume. Volume's waned a bit in the gold contract. You know, some decent action yesterday as you traded higher. But look at what we were trading into, right? September 9th, 257,000 contracts. We did 184 yesterday. Okay, and on a weekly basis, when you incorporate all that volume, you got the week of September 1st. That was 4 trading days. You couldn't even get the same amount of volume last week. Doesn't mean that this rally is going to stop on a dime or turn around, but you do want to see more volume. You take a look at the gold contract, right? You get that acceleration on September 2nd. Volume rolling off a bit on this recent run, accelerating to 37.37. 37.37, how about it? Silver, there's your acceleration on September 2nd as well. A lot of the equities are going to have the same thing. Now, some of them carried forward with volume. Okay, some of them did, but a lot of them, of course, they're going to trade with volume as you trade there. All right, Vista Gold. How about Vista Gold? We got to look at Vista Gold, man. Vista Gold up another, 8 to 10 pennies in the pre-market. You spiked to 246 yesterday. Folks, Vista Gold's volume yesterday, 8.8 million shares. Just to put things in context, this is a weekly chart going back 5 years. Okay, the highest weekly totals of volume are 10.7 million and 12.6 million for a week. We did 8.8 yesterday to the upside. That's how you like to trade, man. Okay, look at the ramp up. And keeping in mind that this bar, this is a weekly chart we're looking at on Vista. Here's your weekly chart for this week so far. But that weekly bar is just for 1 day of trading yesterday. Look at it compared to all the weekly bars. Now, you got a bar out here from June 2nd when you traded lower. Do you remember that trade, folks? I'm sure you do if you were in Vista, right? You got to move with 5.7 million shares to the downside. Well, on that move yesterday, the upside, you're talking about 8.8 million. Whew, from 30 pennies to 217. You hit 246 yesterday. And hey, hold on for the ride, folks, because that is a particularly volatile equity, especially when you trade over a period of, 6 weeks from about 90 or a buck to 246. Quite a run. There's a lot of runs in this market right now. AEM, okay, getting a little bit above, actually, the channel line. And again, so you look at some of the weekly volumes of these gold equities, folks, okay? We're going to have some volatility in both directions, I think, coming forward. Fed days tomorrow, okay? What do they always say? There's a chance here of a buy the rumor, sell the news type of action. Okay, we're coming into a cutting cycle. We're coming into Stephen Moran. He's the first meeting that he'll be on there. And imagine that he's going to have to show up as part of the administration, right? Do you think he's going 25 or do you think he's going 50 tomorrow, folks? Do you think he's going 75? Probably going 50, right? There's going to be pressure from within the Fed. He's not going to show up and not be a dissenting vote to go 50 when they go 25 and have to answer to Trump. That's not what's happening. Now, he's going to say he agrees with that. That's why he's in that position, okay? But that is why he's in that position, because he does agree with it. So pressure's going to be on. That's built in right now. So I find myself saying, okay, we're a little bit overextended here. Volume waning a little bit. Okay, you take a look at AEM. You peak out at 156.18 last week. But remember, folks, when you traded higher on September 1st, that was 4 trading days, right? What do? You get above it. You give it up a bit on lighter volume on AEM. A lot of strong equities in that gold market right now. But you would like to see the volume accelerate as you continue to push higher. Let's see, what were some of the other ones? Yeah, AGI, Alamos, quite a chart, right? And you see this channel line. It's back to the top portion. But again, you look at the volume, right? The week of September 1st on 4 trading days, 17.8 million. You get above that on 14.7 and 5 trading days. Oof. New gold, that's the kind of volume you like to see, though. Okay, check out that volume. Okay, so not all the equities did it. There were some winners last week that did it on volume. That's how you like to see it. Now, the counterpart of that is that look at the volume we had on new gold when you were at $5, right? The week of June 2nd, the pullback from June 23rd. That was a great spike last week, though, on almost 80 million shares, almost the most weekly volume we've had in a couple months on new gold. So, gold, you talk about it, man. And then how about the silver stocks? Okay. Hecla, that's some volume for you, baby. That's how you like to do it. Okay. Hecla, that's how you like to do it. Volume. Pay attention to it, folks. Okay. Look at First Majestic, these silver stocks. Look at the acceleration last week versus some of the pullback we got. That's what I'd be looking at out there if you're looking, folks. Quite the run. Silver, of course, quite the run. And the XAU and the HUI now both accelerating past the 1 to 1.618 expansion, and they're both at 100% returns for the year. Stay tuned, folks. We'll come back, talk some equities. Don't go away.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&P's up by 4 right now. NASDAQ 100 up by 47, and we got retail sales. And boy, this consumer. Retail sales beat forecast and a sign of solid summer spending. Taken in the context of a Federal Reserve decision tomorrow, where there's a 96% market consensus that they're going to cut by 25 basis points, and there's a 4% outlier risk they're actually going to cut by 50 basis points, you got quite a move, right? In terms of retail sales. 0.6% after a similar gain in July. Excluding cars, sales climbed 0.7% for the month. For the month, right? You go back to June, July, and August, that's over a 2% gain. Now you're picking up a decline in May. There's volatility on a 30-day basis as well. 9 out of the 13 categories posted increases, led by online retailers, clothing stores, sporting goods. We had back-to-school shopping going on, of course. And yeah, you bring that into the context of a Fed meeting tomorrow, and hey, we're going to see what the chairman has to say. And we're going to get a cut, folks, and they're going to run it a little hot right now. And there's risks to each side of the trade. And they're going to err on the side of the risk of potentially running it hot. Yeah. Okay, let's jump around. Jump around to Tesla shares. Tesla, about $6 this morning, trading at $4.16. You were up to $4.30 yesterday. Elon stepping in with an additional $1 billion buy. And Mr. Ellison. So Oracle reports out there that, yeah, they're going to be a player when it comes to TikTok. We're going to get more details of that throughout the week. Oracle shares up another $10 in the pre-market. We were all the way up to $320. A little bit of selling coming in right there at 9.10. Nonetheless, the world's richest man in the world, Larry Ellison, battling it out with Elon, and he's got his hands in a lot of jars, whether it's Oracle, TikTok, Paramount, Skydance, Warner Brothers Discovery, Hawaiian Islands, right? Why not? Oracle up by $10 this morning. Paramount Skydance chopping around slightly with a bid-ask right near where we closed yesterday. Warner Brothers Discovery has settled a bit. We're off that high of yesterday. We're at $19 on the speculation of what those deals will look like. And so it is Fed Day. Taking a look at the probabilities, and there it is for this meeting. 96% chance that they're going to cut by 25 basis points, which would bring the target range to 4 to 4.25. And there's a slight chance they actually go more than that. You go out to December, about a 70% chance that they go cut, or 3 over that period of time, however it happens. That would bring them down to 3.5 to 3.75. Go out to January, the number is still there at about 47%. You make it out to March, and the market then begins pricing in 4 cuts, right? Hey, can you imagine if this market gets 100 basis points of cuts right now, and hey, it's priced in? Okay, so that's one of the risks. But even thinking about mortgage market, etc. All right. So some of the equities trading higher yesterday, the uranium stocks, nuclear. And it would make sense, folks. Energy is everything. We're not going to be, these tech companies are not going to be constrained by warehouse space or by chips. They're going to be constrained by energy to use that stuff. The U.S. looks to boost uranium reserves for nuclear power. Energy Secretary said the U.S., this is yesterday afternoon, but we had CCJ, some of the other equities in that uranium space trading higher, should boost its strategic uranium reserve to buffer against Russian supplies and increase confidence in nuclear power generation. So Russia supplies about a quarter of the enriched uranium needed by America's fleet of 94 reactors. Yeah, that seems problematic. Yeah, that seems like an issue, which generate about a fifth of U.S. electricity. And yeah, that could be a problem, of course. All right, and there was the action on Kamiko yesterday. This thing has been on quite a run. I cover this in the Gold Report as well, folks. If you're interested, check it out on the newsletter tab on the front page of TFNN. New full issue today with all the equities covered. I had a video out yesterday for subscribers. The one thing a little bit troublesome, now this is a weekly, and we're going to get some big volume on the weekly because that's a weekly volume for just one day. So there's a real potential here for this thing to break out of this area of $80 and to do it with volume. That's yesterday's volume, 10 million shares. Okay, you've been consolidating, volume's been pairing. You've been up there for 2 months at that 80 price point, and we're going to blow it out of the water right now. And there's your daily, 10 million shares, blows it apart, takes out all of these highs recently. It's a strong chart. And yeah, you were up about 10% yesterday. You're going to be up a little bit to 86.50 so far this morning. All right. I'll find the next article I got. We got a couple more pulled up here as we come into the opening bell. We jump over to Meta shares. And yeah, so as I do that, let's jump back as this headline is hitting right now. So the TikTok deal, new investors with ByteDance and Oracle to keep cloud agreement, sources say. And that was just hitting like 5 minutes ago. We'll see how. So Oracle gives up some of the optimism potentially there. There's your trade as that news came out to about 312. Jump over to Meta shares, up a few dollars in the pre-market to about 767. Yeah, so tomorrow they're going to unveil their most advanced smart glasses yet at their Connect annual event. Take a look at the volume on this equity. Lightening up since that acceleration to where we are right now. We're coming back for the opening bell, folks. We'll look some more equities. We'll be right back.
Your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open, and we got open green prices yet again, with the S&Ps up by 7 this morning. You got the NASDAQ 100 up by 43. That's 0.2% in the green, and the Dow barely in the green by about 28 points right now. We jump over to Tesla shares. So Tesla up $4, up another full percentage point. And boy, I tell you this one, folks, this one's a little bit of nightmare fuel. And Bloomberg had a great article on this a couple days ago, and it seems like this would spurt it, or maybe they wrote the article because the investigation was coming. But in either way, the National Highway Traffic Safety Administration said Tuesday it's opening a preliminary evaluation of Tesla's electrically powered door handles. I was not aware of this until 2 days ago. That the door handles are an electrically powered issue, and when the battery isn't working, the doors don't work. And guess when the battery doesn't work? When you get into an accident. Talk about horrors, man. The probe specifically focuses on about 175,000 Model Y SUVs. It's focused on the operability of the electronic door locks from outside of the vehicle, as that circumstance is the only one in which there is no manual way to open the door. That's a problem, folks. When emergency crews show up, etc., they can't open the door because it's electronic. There's no manual way. I mean, think about going through a design team. What blew me away is going through design. There are decisions you make during the design process, right? There's, benefits, clawbacks, risks, rewards, advantages offset by disadvantages. So they make a calculated decision that results in the fact that when you get into an accident, you have a manual release on the inside, okay? But you have a child may not be able to access or operate the releases even if the vehicle's driver is aware of them. In some instances, people were forced to break the vehicle's window to regain access. It's only on the inside. It blows me away. All right, people get knocked out all the time. All right, so Tesla, they shakes that off though, man. Part of the thing that's remarkable is now Tesla's its own equity, okay? But we have Trump wanting to do quarterly earnings every 6 months. Listen, that's not the end of the world, okay? I don't agree with it at all. I don't know why this regulatory burden is so bad. It's like all of a sudden we're just saying companies aren't even preparing for the future. All they're doing is caring about every 90 days. I don't think that's the case at all, because it's all going to catch up every 180 days eventually, folks. And all it's doing is decreasing transparency during those 6 months. There's a lot that happens over a 6-month period, especially now. Okay, the equal dissemination of information is not going to be as equal. That's it, period. Okay, there's going to be more people in the know the longer you go over that period of time. And then you get Tesla. Tesla's not worried about 90 days. Okay, they're not worried about 90 days. Zuckerberg, he wasn't worried about 90 days, right? These companies that are vastly spending, these CEOs have options that they're not worried about 90 days. It'd be one thing if they suspended it and you'd be like, oh, okay. It's still coming every 180 days in. The CEOs are paid for how the stock performs over years, not over 90 days. Okay, yes, there's pressure to beat and deliver every 3 months. Okay, let's get into the Fed. So we get a Fed decision tomorrow, and maybe we're all learning about the third mandate. Is there a third mandate? We're about to find out. What happened to 2 mandates? Price stability and full employment. Well, we're getting talk from Fed governors now. Okay? Yeah. Stephen Moran cited a third mandate. Okay? Moderate long-term interest rates. Moderate long-term interest rates. I'm very interested to see how the government getting into the business of squashing long-term interest rates at the same time as passing budgets that add $4 trillion to the debt over the next 10 years square. As market participants, folks, okay, we can always hope. Hope is not a plan. I hope the economy grows enough that we don't add to the debt. That's not a plan. And I'm very interested to see how the government is going to suppress lower interest rates through the Fed. But yes, that is the third mandate that they're talking about, pursuing moderate long-term interest rates, okay, to the surprise of many, myself included. He was quoting a long-forgotten part of the Fed statute in full. Yeah. But guess what? A newly minted Fed official mentioning the third mandate in congressional testimony. Don't take it lightly, folks, okay? And you know Trump wants them lower. But the president doesn't get to decide those rates, especially in the face of a debt that is exploding with neither party able to calm it down. So this is in the original Fed documents, not well defined, that allow the Fed to have much stronger influence over long rates, okay? And you have an analyst out here just saying, it's not today's trade, but something you better think about, okay? Because you're going to get many new members, and this is obviously going to be the thinking. But those two squaring of a debt exploding at the same time as now the Fed focusing on that aspect of things. And so how does this play out, right? Well, home ownership, okay. As somebody in home ownership, as somebody in real estate, okay, we've been talking about the home builders. Wasn't happening yesterday, though. All right, look at these home builders giving it back a bit. All right, we were just trading at 182 on Thursday. We're at 171 on DR Horton. They're all lower right now, even as rates low. So, a potential trigger point of action would be a scenario where long-term yields stay elevated despite a series of Fed rate cuts. Okay? Very possible this plays out. I'm really hoping that mortgage rates come down, folks. But I'm also well aware that currently we have a 10-year yield at 4%, and this market has already priced in a 70% chance of 3 cuts coming in the next 3 meetings. Okay? Among the possibilities being floated in the bond market that could help bring down or at least cap longer-dated rates include the Treasury selling even more U.S. bills and ramping up buybacks of longer-dated bonds. A bigger step is quantitative easing. Now, you have the Treasury Secretary talking about at length prior that he argues of the negative effects. But guess what? True emergencies. And I have a feeling that in this administration, the word true emergency is being stretched a bit, and that this could qualify as a true emergency if it happens, okay? So you're going to get the Fed to reduce rates. There's going to be pressure on longer-term rates to come down. The market may fight that if there's inflation fears. We got retail sales running hot, baby. We got CPI at 2.9%, and the only discussion is how much they're going to cut. S&P's up by 1. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got a little bit of selling. Coming into the opening bell there, we get the S&Ps negative by 1 point, rolls into the red. NASDAQ 100, some selling as well. You're down right now to being just positive by single digits. 24,561, Dow in the red by 100 points, and the Russell off by 10. Bitcoin holding up relatively well, off 135 bucks at 115,000. And we jump over right now to the 10-year. We're getting a little bit of higher price, lower yield right now. Check out this little acceleration we got going since we got those retail sales. You're talking about a 10-year yield at 4.03 right now. And there you go, dollar making new fresh lows at 96.89. Recent lows. So getting back to this conversation ahead of Fed decision tomorrow, talking about a third mandate. This has been done before, okay? But it's been at times of war, etc. But something tells me that this might qualify as an emergency in this administration, as many do right now. The push from Washington to bring down long-dated interest rates would repeat prior episodes, notably during and after World War II in the early 60s. You had Operation Twist, an initiative sought lower long rates while keeping shorter maturities steady. Of course, you have the depths of the financial crisis. The Fed began large-scale asset purchases of mortgages that soon included treasuries in an effort to bring down long-dated yields and stimulate the economy. What about stimulating home ownership? I would argue that the home ownership problem, folks, is a much bigger emergency than trade deficits that have persisted for many more decades than the home ownership problem has. By 2011, the Fed embarked on another version of the twist. These early rounds of QE would be dwarfed by the scale of bond purchases seen during COVID, of course. All it's got to be is an emergency, and they can step in. But could it backfire, right? Inflation, folks, okay? The risk of a more active Treasury and Fed trying to muscle longer dated rates, and I'm reading a lot of this, but this is an important one on a bigger perspective, okay? This isn't going to matter tomorrow. But the Trump administration, and all of us, right? Every politician, we really don't want 2% yields, 2-year yields lower, right? We want 10 and 30-year yields lower. And the market has resisted the ability when you look at, here's your 10-year. Okay, I was looking at these charts prior. We're not even back to where we were on April 7th in terms of higher price, lower yield. Okay, yields are not as low as where they were in April right now, folks. You look at the 2-year, okay, we're just off that spike. But you look at the 30-year, and you are 5 full points from where we were, okay? Let alone, you back it up to where we were last September. This is where the divergence really takes place. There's your 30-year, okay? 127, we're 10 points off where we were last September, about a year ago. There's your 10-year. We were all the way up to 115.24. We're 2 full points below where we were last year on that area. And when you talk about yields, we're approaching 4% right now. But we were down to a yield of 3.9% on the 10-year last year. We were 15 basis points lower on your 10-year. But guess what? Look at the 2-year. We're right where we were. Okay, so there is the option here that it plays out in a way where the Fed decreases rates, you have the 2-year react accordingly, but the market resists to bring down the 10, and most importantly the 10, but even potentially the 30 or the trades off it, okay? And the risk, of course, is that you have a more active Treasury and Fed trying to muscle longer dated rates lower. Could backfire, especially when inflation remains sticky and running above target. We're at 2.9% right now, and retail sales are going up 0.6% to 0.7% on the month. Inflation's running hot, retail sales are running hot, and jobs are weak right now. But is that a full reflection of the economy, that the jobs are weak? That somehow the Fed needs to cut to stimulate? We're going to get to see it play out over the next 3, 6, 9 months. Now, the last part about this is, what do you consider moderate long-term interest rates? Because we're living with a little bit of recency bias, folks. Okay, we're living with this recency bias, right? Where we had 10-year yields at almost 0%. You had 30-year mortgages at 1.75. What is a moderate long-term interest rate? Because by historical standards, where we are right now are well below an average 5.8% dating back to the early 60s. Well, are we going to be growing at that type of growth that we were growing back then? Because if we're not, then the rate doesn't make sense. A lot of the growth optimism, folks, if we're going to square that $3.8 trillion worth of debt that's supposedly going to be added, unless we grow the economy in ways that many economists would argue is not a realistic assumption over the next 10 years, even with the tax cuts, okay? But let's say we are going to grow the economy hot enough to pay for the Trump tax cuts for the wealthy, okay? Let's say we're going to run the economy so hot that that $3.8 trillion gap in between the taxes we raise and the money we spend additionally over the next 10 years, somehow we reclaim that in taxes, right? Let's say that's going to happen. Are you telling me at the same time that we need to bring rates down from 4% and then inflation is not going to be a problem? All of those variables very difficult to come into one equation, okay? If we're running that hot, yield should not be dropping from 4% if we're running that hot, right? The cost of capital is going to start dropping at the same time that we're getting tax cuts that stimulate the economy, where we're going to close a gap of $4 trillion over 10 years. Market forces will usually win out, folks. I mean, remember all this quantitative easing, quantitative tightening, market manipulation, okay? We were at 0% for so long. It all built up, and then we got the rush to inflation. There's a lot of pressures right now lining up to keep rates low. The market's doing well, and we're going to be cutting rates coming into an economy right now that retail sales are on fire, okay? Jobs are going to be important. Jobs are a problem right now. We're going to see that one play out. And this one, Mr. Robert Redford, unfortunately, passing away at the age of 89. 89, not bad. Look at that beautiful face on that handsome man. 89 years old. Man, I remember some great movies growing up even. Of course I do, right? So many great movies. Started Sundance. Yeah, won 2 Academy Awards, 3 Golden Globes.
Many trading newsletters.
Presidential Medal of Freedom in 2016. Oh, we're going to break. We'll be right back, folks.
Scan the entire market looking for these hidden opportunities. One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got a little bit of selling in this market. We go right across the board. S&P is right now negative by 6. We're trading at 66.73. NASDAQ 100 off by 10. The Dow takes a dip to negative territory off 140 points. And the Russell off by 12. We jump back to yields right now. Higher price, lower yield with the 10-year approaching that 4% level. What are we at right now? Let's see. We're at 4.03. Okay, 4.03 on the 10-year. Dollar weakness ahead of Fed Day, 96.89. How about that dollar weakness? And gold and metals. Gold up $15.90 at 37.34. We hit 37.37 for an all-time high, and you jump to silver. Excuse me, up 37 pennies to 43.33. Robert Redford, so many great movies. Can't even name them, right? But one that does come to mind, man. You know, you always got those beautiful movies of your childhood, right? And I was at a fortunate time where I was a young kid. I was born in 1980. The Natural. Oh, what a movie. I may watch that one tonight. 1984. So Redford, he was born in 1936. And so he was 48. Look at this guy, 48 at that time of that movie. Amazing. Yeah, 48. Had to do the math again. Almost 50 years old at that time. He looks like he could be 28. Nonetheless, he was not. The movie was based on that he is a middle-aged unknown, right? Middle-aged unknown. I would say that back then, I mean, look at these movies popping up to him. But yes, The Natural. And you got to love it, right? I go back to it. It's like you love it as a kid. Lightning strikes a tree, and a boy that's a gifted athlete goes out, and he carves a bat out of that wooden tree that just got struck by lightning, right? It's the Wonder Bat in The Natural with Mr. Robert Redford. Amazing actor. All right, folks, stay tuned. We got our man Basil Chapman. He's coming up next. We got markets a bit in the red. Let's jump over and see how Tesla's doing right now. Tesla, there you go, up by 1.5%. Oracle shares up by $12 right now. Folks, thanks so much for tuning in, kicking your trading day off right here with me at TFNN. Basil Chapman's up next with the Tiger Technicians Hour, folks. We got Fast Market at 12, Larry at 1, and I will be back this afternoon from 3 till 4. I'll be talking to our man Basil. I'll be talking to our man Tim Ward. Stay tuned. Basil Chapman.